Some of the best investment opportunities are hiding in plain sight, overlooked by those chasing hype. Today, I'll reveal my top 3 stocks to buy right now. These aren't risky bets, they're dominant companies with decades of growth ahead. First, we'll look at the Amazon of Latin America, a company powering commerce and payments for over 650 million people. Next, a real estate giant known as the Monthly Dividend Company, with a 50-year track record of compounding returns. And finally, a fast-growing consumer brand disrupting its industry with a cult following and explosive expansion. Let's dive in. Don't forget to like, comment, and subscribe for more investing insights. Our first pick is MercadoLibre, ticker MELI, a true powerhouse in Latin America. If you're looking for a company that's not just riding the wave of digital transformation, but actually creating it, MercadoLibre is the name you need to know. This is a business that's become synonymous with e-commerce and fintech across an entire continent, and its story is just getting started. MercadoLibre isn't just an e-commerce site, it's the backbone of digital commerce and payments across a fragmented, underbanked continent. In a region where millions have limited access to traditional banks, MercadoLibre has stepped in to bridge the gap, making it possible for people to buy, sell, and pay online with ease. They built their own logistics network, Mercado Envios, solving delivery challenges in regions where reliable shipping barely existed. This wasn't just a nice-to-have, it was a necessity. By investing in warehouses, last-mile delivery, and even their own fleet of vehicles, MercadoLibre has made it possible for goods to reach customers in remote towns and bustling cities alike, often faster and more reliably than local competitors. Their fintech arm, Mercado Pago, started as a payment processor but now offers digital wallets, loans, and investment tools, often serving as the first bank account for millions. For many users, Mercado Pago is their entry point into the formal financial system, allowing them to save, invest, and access credit for the first time. This is a game changer for small businesses and individuals who have been excluded from traditional banking. This creates a self-reinforcing ecosystem. E-commerce drives payment adoption, and payments keep users loyal to the platform. The more people use MercadoLibre to shop, the more they use Mercado Pago to pay, and vice versa. It's a virtuous cycle that strengthens the company's moat with every transaction. The result? Powerful network effects. More buyers attract more sellers, and more users make Mercado Pago indispensable for merchants. This flywheel effect means that as MercadoLibre grows, it becomes harder and harder for competitors to catch up. MercadoLibre's growth is staggering, revenue and margins are rising, and operating leverage is kicking in. The company has consistently posted double-digit growth, and as it scales, its profitability is accelerating. Investors have taken notice, and for good reason. They're not just a retailer, they're the infrastructure for Latin America's digital economy. From cloud services to payment rails, MercadoLibre is building the digital backbone that powers commerce, finance, and even logistics for millions of people and businesses. As the region's middle class grows and more people come online, MercadoLibre is positioned to capture a huge share of that growth. The digital adoption curve in Latin America is steep, and MercadoLibre is at the very center of this transformation, ready to benefit as millions of new consumers enter the market. E-commerce and digital payments in Latin America are still years behind the US and China, so the runway is massive. There's enormous headroom for growth as internet penetration increases and more people gain access to smartphones and digital services. Some worry about the high valuation, but with 30 to 40% growth and expanding margins, MercadoLibre is likely to grow into it quickly. The company's track record of execution and innovation gives investors confidence that today's price could look cheap in hindsight. You're buying a company with a dominant brand, a logistics moat, and a fintech platform that's part of daily life for millions. It's not just a website or an app, it's woven into the fabric of commerce and daily transactions across Latin America. Founder-led management has consistently innovated, building logistics, credit, and more to stay ahead. Marcos Galperin and his team have a deep understanding of the local market, and their willingness to invest for the long term has paid off in spades. Risks like currency swings and political instability exist, but MercadoLibre has managed them for over 2 decades. The company's resilience in the face of economic and political turbulence is a testament to its adaptability and strong leadership. For your portfolio, this stock offers high growth and international diversification, untethered from US market cycles. It's a way to tap into emerging market growth without the same risks as investing in less established companies. Their user engagement is off the charts. Customers use multiple services, making revenue streams sticky and predictable. From shopping to payments to credit, MercadoLibre's ecosystem keeps users coming back, month after month. MercadoLibre is more than a stock. it's critical infrastructure for a continent's digital future. As Latin America modernizes, MercadoLibre is the platform enabling that progress, connecting people, businesses, and capital in ways that were impossible just a decade ago. As Latin America's GDP and internet penetration rise, MercadoLibre will capture more economic activity. Every new smartphone user, every new online shopper, is a potential MercadoLibre customer. They've even fended off Amazon by tailoring solutions to local needs, a durable advantage. While global giants have struggled to adapt, MercadoLibre's local expertise and relentless innovation have kept it ahead of the pack. Take MercadoLibre. It has grown into one of the most dominant e-commerce and fintech platforms in Latin America, and the market is valuing that position at about $103.16 billion. The stock trades at a price-to-earnings ratio of roughly 49.78, reflecting strong growth expectations. Earnings per share sit at about 40.88, supported by real scale in the business. In 2024, MercadoLibre generated approximately $20.77 billion in revenue and delivered net income of about $1.91 billion. That combination of rapid revenue growth and rising profitability is why investors continue to price the company as a long-term compounder rather than a mature retailer. In summary, you get a market leader, a two-sided network, a huge secular tailwind, and a proven team. This is a rare combination that sets MercadoLibre apart from almost any other company in the region. This is the kind of long-term compounder you want in your portfolio. Over time, the power of compounding growth in both users and revenue can deliver outsized returns for patient investors. MercadoLibre is my #1 growth pick for a reason. It's a company that's not just winning today, but is set up to keep winning for years to come. If you want exposure to the digital transformation of an entire continent, this is the stock to own. MercadoLibre is the gateway to Latin America's digital revolution, and its potential is only just being realized. The upside over the next decade is substantial, and the competitive position is secure. With a strong brand, loyal user base, and unmatched infrastructure, MercadoLibre is built to last. MercadoLibre is a buy and hold for serious investors. If you're looking for a stock to anchor your international growth portfolio, this is it. Don't miss out on this compounding machine. The earlier you get in, the more you stand to benefit from the exponential growth ahead. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Shifting gears, let's talk about stability and compounding income. Realty Income, ticker O. This company is often called the monthly dividend company for a reason, and it's a favorite among income-focused investors who want to sleep well at night. If you're looking for a stock that delivers consistent cash flow and has a proven track record, Realty Income stands out as a true pillar of reliability in the real estate world. Realty Income is a REIT with a legendary track record, over 640 consecutive monthly dividends, and more than 100 quarterly increases. That means for more than 5 decades, shareholders have received a check in the mail every single month through recessions, booms, and everything in between. This kind of consistency is rare, and it's a testament to the company's disciplined approach and resilient business model. Their business is simple: own high-quality commercial properties, lease them to essential businesses like Walgreens and FedEx, and collect rent. These are not just any tenants, they're some of the most recognized and stable companies in America, which means Realty Income's cash flow is as steady as it gets. These tenants are recession-resistant, providing stable, predictable income. Long-term leases, often 10 to 15 years with built-in rent increases lock and growing revenue. Even during economic downturns, people still need to pick up prescriptions, grab groceries, or ship packages, so these businesses keep the lights on and the rent checks coming. Realty Income's scale gives it a lower cost of capital, access to the best deals, and a diversified portfolio across industries and geographies. With thousands of properties and hundreds of tenants, no single business or region can make or break the company. This diversification is a powerful shield against unexpected shocks. They own properties in all 50 states, Puerto Rico, the UK, and Europe, insulating them from regional or sector-specific risks. This global footprint means that even if one area faces challenges, the rest of the portfolio can keep performing, providing a steady stream of income for shareholders. In times of inflation or uncertainty, real estate shines, rents and property values tend to rise, and Realty Income's long leases buffer against volatility. The company's contracts often include rent escalators, so as the cost of living goes up, so does the income flowing to investors. This makes Realty Income a natural hedge against inflation. The monthly dividend is a game changer for compounding. Reinvesting those payments accelerates your wealth building. Unlike quarterly payers, monthly dividends let you put your money back to work faster, harnessing the power of compounding in real time. Over years and decades, this can make a huge difference in your total returns. Some call Realty Income boring, but that's the point. It's predictable, reliable, and managed for long-term growth. In a world where so many investments are volatile or speculative, boring can be beautiful, especially when it comes with a growing stream of cash. The management team excels at capital allocation, constantly upgrading the portfolio and expanding into new property types like data centers and casinos. They're not just sitting still. They're always looking for ways to enhance returns and adapt to the changing economy, ensuring the company stays ahead of the curve. Sale-leasebacks, where companies sell properties to Realty Income and lease them back, provide high-quality, long-term tenants. This strategy gives businesses the capital they need while locking in Realty Income as their landlord, creating a win-win relationship that benefits both sides. Rising interest rates have pressured the stock, but that's created a buying opportunity. Lock in a higher yield now and benefit when rates stabilize. Historically, Realty Income has bounced back from these periods stronger than ever, rewarding patient investors who take the long view. Realty Income is the bedrock of a diversified portfolio, an anchor for stability, income, and steady growth. Whether you're just starting out or looking to preserve wealth in retirement, this stock can play a crucial role in your investment strategy. Their investment-grade balance sheet ensures they can weather economic storms and keep acquiring properties. Strong credit ratings mean they can borrow at attractive rates, fueling future growth and protecting the dividend. Expansion into Europe adds another growth lever, as they consolidate a fragmented market. By bringing their proven model overseas, Realty Income taps into new opportunities and diversifies even further. Known for its monthly dividend model, the company carries a market capitalization of around $56.57 billion. It trades at a higher price-to-earnings ratio of about 57.59, even though earnings per share are much lower, at roughly 1.07. In 2024, Realty Income produced about $5.27 billion in revenue and reported net income of approximately $847.89 million. The valuation here is less about explosive growth and more about predictable cash flows, long-term lease structures, and income stability, which investors are willing to pay a premium for in uncertain markets. Owning Realty Income is like being a landlord to top businesses, without the headaches. You get all the benefits of real estate ownership, like steady rent and property appreciation, but none of the hassles of fixing leaky roofs or chasing down tenants. For dividend growth investors or retirees seeking reliable income, this is a must-own. The peace of mind that comes from knowing your income is secure and growing is hard to put a price on. The formula is simple. Buy good real estate, lease to great tenants, pay shareholders. It's a straightforward approach, but it works, and Realty Income has mastered it. It's worked for over 50 years and should keep working for decades to come. The company's ability to adapt, grow, and deliver for shareholders is unmatched in the REIT space. Realty Income is the ultimate sleep-well-at-night stock, especially at today's valuation. When markets get rocky, it's comforting to know your investment is built on solid ground. If you want steady compounding and monthly income, this is your pick. Over time, those monthly checks can snowball into a substantial nest egg, especially if you reinvest and let the power of compounding do its work. Let's move to our final stock, a high-growth disruptor. Transition to next scene. Our third pick is Dutch Bros, ticker BRO, a fast-growing drive-through coffee chain with national ambitions. While it may not be a household name everywhere just yet, Dutch Bros is quickly becoming a major player in the coffee world, and some investors are starting to wonder if it could be the next Starbucks. Dutch Bros isn't just another coffee shop, it's built on speed, convenience, and a uniquely positive customer experience. The brand's focus on drive-through service means you can get your caffeine fix without ever leaving your car, making it a go-to spot for busy mornings or quick pick-me-ups. Their baristas are trained to create personal connections, fueling a cult-like following and fierce loyalty. Customers aren't just buying coffee, they're getting a dose of positivity and energy that keeps them coming back, sometimes daily. While competitors automate, Dutch Bros doubles down on human interaction, a brand moat that's tough to replicate. In an era where many chains are cutting back on staff and relying on technology, Dutch Bros stands out by making every visit feel personal and memorable. Their drive-through model means smaller, cheaper stores, with high throughput and quick profitability. These compact locations allow Dutch Bros to open new stores faster and at a lower cost than traditional coffee shops, fueling rapid expansion. Dutch Bros is expanding rapidly from the West Coast eastward, With just over 800 locations and room to multiply that number many times, the company's growth strategy is aggressive, targeting both new and existing markets with a proven playbook. New stores are performing as well as established ones, proving the concept travels well. This consistency is a strong indicator that 𝗗𝗟𝗨𝗧 can succeed far beyond its original markets, and it's a key reason why investors are paying attention. Their menu, especially sweet and cold drinks like Blue Rebel Energy, appeals to younger customers often missed by traditional coffee chains. 𝗗𝗟𝗨𝗧 has tapped into Gen Z and millennials with creative flavors, vibrant branding, and a fun, social vibe that sets it apart from more traditional competitors. From an investment perspective, you're getting in early on a national growth story. Think Starbucks or Chipotle in their early days. The potential for long-term compounding is significant if 𝗗𝗟𝗨𝗧 can execute on its vision and continue to win over new fans across the country. Risks include a premium valuation and the need for flawless execution, but the growth runway is enormous. Investors should be aware that rapid expansion comes with challenges: competition, rising costs, and the pressure to maintain quality and culture at scale. Competition is fierce, but 𝗗𝗟𝗨𝗧's culture and service set it apart. They're not just selling coffee, but a 5-minute highlight in your day. That emotional connection is a powerful differentiator, and it's something that can't be easily copied by larger, more established chains. Founder-led leadership keeps the culture authentic and focused on long-term success. Travis Boersma, the co-founder, remains deeply involved, ensuring that the company's values and mission are front and center as it grows. The numbers are strong: double-digit same-store sales growth and rapid unit expansion drive explosive revenue. 𝗗𝗟𝗨𝗧 has consistently outperformed expectations, and its financials reflect a business that's not just growing, but thriving. Technology investments like a mobile app and loyalty program boost efficiency and customer stickiness. These digital tools make it easier for customers to order, earn rewards, and stay engaged with the brand, further fueling repeat business. If 𝗗𝗟𝗨𝗧 can scale to thousands of locations, the upside is massive. The company's expansion plan is ambitious, but if successful, it could reshape the competitive landscape of the coffee industry in the U.S. This is a bet on brand, culture, and execution, qualities you can't buy with marketing alone. 𝗗𝗟𝗨𝗧's secret sauce is its people and the energy they bring to every interaction, which is hard for competitors to replicate. 𝗗𝗟𝗨𝗧 offers growth stock firepower in a defensive sector. People drink coffee in any economy. Whether times are good or bad, the daily coffee ritual remains strong, giving 𝗗𝗟𝗨𝗧 a resilient foundation for future growth. The market is valuing the company at roughly $27 billion, with a price-to-earnings ratio of about 23.97. Earnings per share stand at around 3.30. In 2024, 𝗗𝗟𝗨𝗧 generated approximately $4.7 billion in revenue and posted net income of about $981 million. Compared to the other two, 𝗗𝗟𝗨𝗧 trades at a lower multiple, reflecting both its faster unit expansion model and the risks that come with competition and consumer spending cycles. The brand is strong, the economics are proven, and the runway is long. 𝗗𝗟𝗨𝗧 is still in the early innings of its national expansion, and the opportunity ahead is substantial for both the company and its investors. To recap, MercadoLibre is the digital backbone of Latin America, Realty Income is a fortress of stability, and 𝗗𝗟𝗨𝗧 is a high-octane growth story. Each of these companies brings something unique to the table, offering different ways to play long-term trends. Each plays a unique role in a diversified portfolio: international growth, stable income, and domestic expansion. By combining these types of investments, you can build a portfolio that's both resilient and positioned for growth. Which do you think has the strongest long-term advantage? Let me know in the comments. I'm curious to hear your thoughts on which of these companies excites you most for the next decade. Is it MercadoLibre's ecosystem, Realty Income's dividend, or 𝗗𝗟𝗨𝗧's brand loyalty? Or maybe you see potential in all three for different reasons. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the StocksGalore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. There you have it. 3 outstanding companies I'm buying for the long term. MercadoLibre offers explosive international growth, Realty Income delivers steady monthly income, and 𝗗𝗟𝗨𝗧 brings high growth potential with a loyal following. These aren't stocks to flip. They're world-class businesses to own for years. Put together, these 3 companies highlight how investors price very different paths to value creation. MercadoLibre as a high-growth platform with expanding margins, Realty Income as a cash-flow-driven income vehicle, and 𝗗𝗟𝗨𝗧 as a consumer growth story still scaling into its full potential. Focus on quality, durability, and compounding, and you'll set yourself up for financial success. Which of these stocks excites you most? Share your thoughts below, like, comment, and subscribe for more investing updates. Thanks for watching, see you in the next one.